Thank you, and good afternoon, everyone. Thank you for coming. I first would draw your attention to our disclaimer, and you can read that at your leisure. Caledonia is an established Zimbabwean gold producer with a multi-asset portfolio, and our portfolio is very well structured along the development curve. We have the Blanket Gold Mine, which is our primary asset, which the engine room of the business. We've had several successful new asset acquisitions, which have been quite promising for us and are very exciting for the future of the company. So we now have essentially 4 assets in Zimbabwe. We have a long track record of returning value to shareholders. We've been paying a dividend since 2012. That dividend's paid quarterly, so that's 14 years of history of paying dividends. We've probably returned about $60 million to shareholders over that time. And we've grown the business quite substantially and are well poised to become a multi-asset producer. And we're a major player in the Zimbabwean gold mining sector. We're very proud of our track record in Zimbabwe and what we've achieved there. We make an enormous social contribution, and it's been a very profitable investment for us as well. So we think it's a genuine partnership that works very well. As I said, our asset portfolio is well mixed and diverse along the development curve. We have the Blanket Mine. That's the engine room of the business. That produces 75,000 ounces a year. All-in sustaining costs are below $1,000 an ounce, so very, very healthy margins at these gold prices. It's a long-life, mature asset with very well-understood geology, very stable metallurgy. It's been a fantastic investment for us that we bought in 2006 when we entered Zimbabwe. And that pays for everything and means we don't depend on capital markets to fund our shareholder. We don't depend on shareholders to keep funding the business. We have quite strong positive cash flow. We then have the Bilboes asset, which is an asset we acquired in January. We closed the deal in January 2023. It's a very large transformational project for us. It's over 3 million ounces, 2.5 million ounces of M&I at a grade of 2.3 grams a ton. Just a comparison, I mean, the average worldwide run-of-mine grade for the gold mining industry is about 1 gram a ton. So for an open pit, I'll talk in much more detail on the project later on, but Bilboes is a very promising project for us and certainly has the potential to transform us into a mid-tier gold producer. We then have Marley Green, which is a resource of about 850,000 ounces at 2 grams, so very good project. We quite like it. But there's no feasibility study. We still need to do a lot of work to figure out whether there's a mine there and how we would commercialize that. But it is a compliant resource that is in the pipeline. And then we have Motapa, which is a relatively early stage brownfield exploration project, which is very exciting. But we're still drilling that, and we haven't made any. There's no resource there, and we've not announced any of the drilling results. But Motapa is very promising for the future of the business. As I said, we've evolved the business quite substantially over the years. So we bought Blanket in 2006 for $4 million of Kinross. Now, if you just think about that over 18 years, we've paid $60 million in dividends to our shareholders over that time. Blanket will earn at this gold price, if this gold price holds, about $100 million in EBITDA. So we're very proud of our track record of investing against the tide. It was clearly a time in Zimbabwe when everybody was running for the hills, and we made this investment. And it's been a fantastic investment that's paid off many times over. In 2021, we commissioned a new shaft at Blanket, which goes down to 1.2 kilometers. We've increased gold production from 40,000 ounces in 2015 up to 80,000 ounces last year. Guidance for this year, 70,000 ounces. We also acquired Marley Green, which is the asset I mentioned earlier. Then in 2022, we acquired Bilboes and Motapa, produced 80,000 ounces of Blanket, as I said. Commissioned a solar farm to ensure our electricity supply, and then closed the Bilboes deal in 2023. So we've really, the business has transformed from a single asset, relatively small producer, to now a business where we have production and a very, very promising growth profile. So as I said, Blanket is the engine room of the business. This is an underground mine that has been operating for 118 years. It's a very, very deep, relatively typical Archean greenstone deposit. We've got 2.8 million ounces of resource at Blanket. So the mine life extends to 2041. We've got a 10-year reserve life and a 17-year resource life. We've invested very heavily. We've invested over $200 million in Blanket. Brand new shaft, brand new tailings dam. This is now set up to produce us cash flow for many, many years to come. And it's low cost. produces gold at an operating margin of almost $1,600 an ounce at this gold price. This is a graphic of what we've done in the investment of Blanket. So you can see there the shaft at the center, appropriately named the central shaft, is the new shaft we've built. The green shaft where the access to the right is where the infrastructure that we acquired of Kinross back when we bought the mine 18 years ago. This new shaft enables us to go much, much deeper, enables us to mine from both sides. It sets up the mine for many years to come. And all of these ore bodies are open at depth. I've got a slide later on, right here, actually, in fact, on mine exploration. Before we completed the central shaft, we were constrained in terms of hoisting capacity, and therefore we couldn't do waste drill cubbies out into the side of the ore body. So you can imagine to drill a 1.2 kilometer deep deposit is quite difficult. You can't drill it from surface, and you've got to do a lot of waste development out into the hanging wall and footwall to drill into the ore body. So now we've been able to recommence drilling at Blanket. We had a resource update earlier this year. We're excited about what we see. It's consistent with the grade that we've been mining for some time. So this mine is currently out to 2041, but we're quite confident. It's been going 118 years, plus we've got another 17 years to go. It's never had a 135-year mine life. We're quite confident the mine life will continue to be extended, but 17 years on resource and 10 years on reserve is good enough for us. We invested in a solar farm fairly recently, which we're blessed in Zimbabwe with good sunlight. It's tropical and it's relatively high altitude, and we have about 350 days of sunshine a year. So this was a really good investment for us. We have recently announced not a price, but a deal to sell this asset, with a deal to buy back the power. We figure we can redeploy this capital more effectively in building new mines than we can necessarily in building renewable energy plants, given the multiples that those assets attract. So the main growth opportunity for the business is the Bilboes project, and this is I'll spend a bit of time talking this because it really is a transformational asset for our business, and it has the potential to convert us into a mid-tier producer. So Bilboes is a project just north of Bulawayo. It was an asset formerly owned by Anglo American, the Anglo American gold assets in Zimbabwe. And the previous owners of Bilboes, before it was acquired by Caledonia, engaged in a management buyout and invested time and effort in bringing this project up the curve in terms of value. It's a 3 million ounce deposit. As I said earlier, 2.5 million ounces at 2.3 grams a ton, another 500,000 ounces of inferred at 2 grams a ton. We announced a PEA earlier this year. It has, for a 10-year mine life with 150,000 ounces a year production. The PEA highlights on the right there, draw your attention to, at a gold price of 1884, had a $309 million NPV and an IRR of 34%, and all-in sustaining costs of $968. So this is the sensitivity table on the bottom right there is really worth drawing everyone's attention to. At spot gold today and at a discount rate, you can pick your discount rate on the vertical axis, but at a 10% discount rate, this is worth $700 million. At a 5% discount rate, this is close to $1 billion project. So, and we have stable cash flow in Blanket to ensure that we can assist with the funding of this business. From a corporate finance perspective, we are in the process of engaging with DFIs and other financial institutions. We're quite confident we'll be able to get about 70% gearing for this project. So there's $250 million of debt, $100 million of equity. Blanket at these gold prices will make a very substantial contribution to that equity, and we will also be in the position to look at other mezzanine levels of finance, royalty streams, those types of funding opportunities. So this is payback period there, 1.9 years at 1884. At spot gold, once this mine starts production, we get our money back in about 14 months from producing this. So we're very excited about this project. We think we have the financial capacity to fund the project and construct it. And once it's in production, we will be approximately half the size of Centamin with an all-in sustaining cost of below $1,000 an ounce. So that's the engine room, or the growth story of the business, and how this is going to take us from a junior business probably a few years ago today into a proper mid-tier gold producer. Now, It's worth paying some attention to Motapa. I mentioned earlier we acquired Motapa 2 years ago for $8.25 million. Motapa is directly south of Bilboes. It's a contiguous land border. They are, in golfing parlance, it's about a long par 5 to get from Motapa to Bilboes. So this is a very exciting deposit. We have not announced anything yet, but we currently got drills turning at this property. The picture there's a little, apologies, I'm supposed to go for the pointer. Oh, that's a pretty good pointer. So there's Bilboes. You can see the remnant oxide mining at Bilboes. So there's 3 million ounces at Bilboes. And then we've highlighted here, this is from Google Maps. Anyone who goes into Google Maps, you can see this from space. But there's residual oxide mining pits from Anglo American. There's the North Strike, the Central Strike, and the Southern Strike. Loads of evidence of artisanal mining over here. We're currently drilling this property, and we expect to make an announcement on the drilling just to update the market in about probably within 2 or 3 weeks. This is still early stage, it's still pre-resource, but the exciting thing about it is that we will have the plant for Bilboes will sit here with a 10-year mine life from what's here. And if we're right about Motapa, we think it's about the same size as Bilboes. Now, we've obviously got a lot more work to do before we can verify that, but this is a 6 million ounce deposit, 2.3 grams a ton, with a permitted mill. Bilboes is fully permitted. It's been operating as an operating oxide mine for many years. So we think this really sets us up to probably a 20-year mine life at Bilboes if we're successful on the exploration side. And then the Marley Green asset, as I mentioned, it's an asset we acquired before we acquired Bilboes, but given the prospectivity of Bilboes and Motapa, it's not something we're paying a lot of attention to now, and it's certainly not something we're allocating capital to. But it's a good project. It's 850,000 ounces on an M&R resource. We are in discussions with other interested parties to potentially monetize this a little sooner and see if this is an asset that could be of interest to other people on a joint venture scale. So it's not going to detract management attention or capital from the main prize, which is the delivery of Bilboes and the exploration at Motapa. But it's a nice asset to have in the growth pipeline. Obviously, we are very proud of our contribution we make to Zimbabwe, and a lot of companies focus on ESG as is appropriate. But our view is that the social contribution we make to Zimbabwe, there are 2,000 people who have honorable work. We operate in a poor country. It's a difficult, financially distressed region in many cases, and we're very proud of the social contribution we make. That's a picture there of our new tailings dam. We've invested $30 million on a new tailings dam, so we don't lower our standards because we're operating in the southern tip of Africa. This is a mine that would look world-class anywhere in the world, and we have 100% local Zimbabwean people. We don't have expats who fly in and out. So our social contribution, we think, speaks for itself in terms of the process there. I mean, a few statistics to point to. I mean, employee turnover of 0.6%. Payments to government are quite substantial. We pay a lot of taxes in this operating mine plus royalties. So we're very proud of being a good corporate citizen in Zimbabwe. So that's pretty much, I mean, the outlook is, we have this engine room, this goose that lays golden eggs in blankets. So that means that we're well funded. We have a very attractive growth project in Bilboes and a very attractive exploration asset in Motapa. So we're in the next 3 to 5 years, we'll be a mid-size multi-asset producer in Zimbabwe. So I've got about a minute if there are any questions. Thanks everyone for your attention. I don't know if anybody has any questions.
Any questions from the audience? Okay, we'll leave it there. Thank you very much, Maurice.